Hey guys, Bitcoin Schmitcoin here. Long time no see. It's been a while since I created any video content, and I think I want to start dipping my toes back into that. I want to start doing more regular streams and throughout the week maybe provide some quick market short videos where I break the market down into about a 1 to 3 minute video where we, rather than taking a long form hour to an hour and a half long lecture style discussion, we reduce it down to one or two things that we can look forward to throughout the week and have goals and targets to measure the pulse of the market on a semi day-to-day basis. I say semi because it'll probably be 1 to 2 times per week, maybe like a Tuesday, Friday sort of thing, a Monday, Friday, start the week off, end the week kind of thing. And in today's video, what I want to focus on is the Bitcoin CME futures market. For those who don't know, the Bitcoin CME futures market is a derivative market that functions much like a filter. Over the weekend, a lot of the professional traders take the weekend off, and the weekend serves as a low liquidity market environment. And what that means is the market is prone to very erratic moves. And what I really like about the CME futures chart is because it does not trade on the weekend, it filters a lot of that noise out. And one of the things that we noticed throughout the entirety of the bear market is we actually formed something called a falling wedge. And a falling wedge is loosely defined as a series of swing highs and swing lows that converge into a wedge in a downward fashion, right? Hence the name falling wedge. Duh, right? And what's particularly special about a falling wedge is it has a very specific target that we can kind of gauge the strength of a move and an end goal of an uptrend. Now, that doesn't mean that just because we form this massive falling wedge that the market is just going to be up forever. And usually what ends up happening is we have a series of swing highs, swing lows in this sort of fashion, but generally have an upward strong bias. Okay. And the way that we measure where a falling wedge goes is we take the first swing high, the first swing low, project it onto the upper trend line, and we take this distance here and project it onto the breakout point. Okay, so in our case, we have a swing low in the 18,000s that projects up to about 15,800. We can just call it 16,000. What's a couple $100 between friends? And we take that exact price amount and we project it upward. And so what that means is we can expect the market to have a continuation, right? Because falling wedges are reversal patterns. And in our case, we had a downward sloping trend, and the reversal would be an upward trend. And before things, everything's said and done, we can expect that this market will likely continue to move up into this 33,000 area. And that is a great target, right? It's a very logical point in the market where this was the beginning of the bear market where things really broke through the support. And this would actually serve as a retest of the support. And just to see if it turns into resistance. Now, that doesn't mean once it gets here, market's done, boom, it turns around. But what it does mean is this is the likely destination before any sort of macro consolidation, any sort of continuation or reversal set up. And we can enjoy a strong upward trajectory that still has another 50% move in it. Now, as we speak, the market is currently in a mid to low time frame consolidation, and it has yet to resolve. But we'll go ahead and check back in on Monday or Tuesday, and we'll see how this is playing out. Next week, we'll go ahead and start looking into more trend, strength of trend, analyzing the trend reversal, trend weakness, things like that. And we'll go ahead and take a deeper dive into what this breakout over here actually means for the market, and if we have any sign of weakness where the trend will fail and things like that. Once again, this was Bitcoin Schmitcoin. Keep an eye out for the live streams, and I'll see you next week.